All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time, here on our YouTube channel. If you haven't already, make sure to hit that subscribe button. Really do appreciate you guys supporting the channel. We're trying to get to 10,000 subscribers. That starts with you hitting that button. Appreciate it as always. And of course, the live market blog on our Discord. Again, that is always free. Would love to see you there. I'm going to start looking to migrating the morning note more into the live market blog. So the guys having it all in one place. So we can answer questions directly from the members. Again, that's going to be free and then it'll be posted on YouTube. So since it is a new month, we're in the middle of the second quarter. I'm kind of just trying new things to kind of meet everyone else's needs. So again, if you have any suggestions on how we can improve the service here at GAR Capital, please leave a comment. Feel free to email me, garcapital@gmail.com, or you can DM us directly on Instagram at GAR Capital. Enough about that. Let's go ahead and get started. Dow futures are down 52 points. NASDAQ is down 70. S&P is down 13 with the Russell down pretty much flat, down about 2. This is off the lows. We did have some headlines come in about some ADP jobs number, which came in better than expected. We had a big flush yesterday, if you guys saw, about 200 NASDAQ points. I think it was about 300. We were at 898 the beginning of the day, and then we closed down around 466. So we'll call it 400 NASDAQ points. My apologies. So pretty much a flush day. I was reading the stock market almanac yesterday, and it was saying that yesterday was a bear day anyways. And yesterday pretty much everything fell, all sectors. So it wasn't really stock specific. Holding calls in that kind of flush doesn't feel the best. But guys, let's go ahead and give some perspective. Let's go to ES here, and we'll go to the 4-hour chart. And I want to show you guys again. Today is a Fed day, so everything could change, as we know. Anything can happen. But of course, me, Perma Bull, leaning towards the long side here. Why? Because we're just a little bit oversold. We haven't been this oversold since the time we bounced off that 100-day moving average, guys. So looking at it here, that's where I'm kind of seeing that we'll probably get this bounce. Probably the lows will hit is 5012 or around 5,000 is what it looks like on the S&P. Would I want to go long here with any new risk? No. Again, I just want to go ahead and see what the Fed does. The expectation is no rate hikes or no rate cuts, but it's really what does Powell say? If he mentions that the predetermined, that's kind of the word I'm looking for, predetermined path is rate cuts this year, we're going to go higher. If they say it's meeting to meeting, it's live, we're not sure, more of that jazz, yeah, then we're going to start testing that 100-day. So let's take a look again rather quickly on the daily, kind of how the script has gone. Again, downward channel, we know that. So we have kind of two scenarios here. We did bounce off this channel here, and we also rejected this channel here. All we are is right in the middle of it. Very similar to how Tesla looked for about 9 months, or so. We bounced off the 100-day. Now the question is, does it hold that support? Below 5010, you're getting down to 4917. Short to your heart's delight, no problem, because the seasonality kind of backs that. May and go away. Remember that kind of saying? The next 6 months, uh, compared to other 6 month period in the S&P 500, seasonally speaking, now is the weakest point in the stock market. It doesn't mean that we're going to go down to zero. It just means that we're going to have some choppiness, some volatility. So, again, guys, we need to be very careful on what we do. We need to make sure we buy time so we can handle these kind of swings that we had just yesterday. I mean, what a big move on all of our trades. Now, I want to take a look at a couple of names, and I wrote this on the actual server here. Let's go and take a look here. Watch this in charts. Take a look at this. All the names that we have open, well, most of them, CVX, FCX, BAC, and Apple, they're all sitting on the 20-day moving average. That's the purple line. That's the purple line. It's the purple line. That's the purple line. Now, I don't believe in coincidences. Something has to give. Either we're going to bounce really, really hard, which is what I think we do. I think we just retrace what we lost yesterday if we take a look at SPY. Now, again, will Powell really say anything different? No, I don't think we're going to get anything special. I just think we're going to get back to 510 and then just kind of hang around there for a minute because it's May and that's just how it goes. You're going to get that weird seasonality, just that choppiness and crappy waiting for the next, news report to come out. yeah, I just kind of see us staying within that 495 to 511 range. And that's kind of where we've been now since for about 2 weeks. So it is a new month. We'll see what we get moving forward in terms of what he may state. But it's all about the waiting game here. So we'll see what we get moving forward. Again, the actual report or the headlines will come out at 2 p.m., while the actual press conference with Fed Chair Powell will begin at 2:30. So until then, I would say just watch the price action, see what changes, and wouldn't put too much risk on the board ahead of that Fed report. The Fed chairman speaks at 2:30 p.m. Eastern Standard Time today. Any and all headlines will be posted on our live market blog. So again, we hope to see you there. The link is on our website, www.gar.capital, and I expect the market to bounce. Now, again, I could be wrong. I've been wrong before. Nothing new. Been doing this for 10 years. You're going to be wrong a couple times. But oversold conditions, like I said, we're at the lowest RSI since April 19th. That was right at the 100-day. Guess what happened? We bounced and we moved higher. Again, it felt like yesterday, it felt like a front running of what the move or what the Fed might do. And I think we're just getting a little too pessimistic on what the Fed might say. We went from 7 rate cuts in January, we were talking about for the year. I thought that was way too much. Now it's going to rate hikes and no cuts, or maybe one cut. I think it's just the market kind of shifting too much very quickly to reacting of CPI and PPI. But what happens if CPI and PPI regarding shelter comes down? Rents are coming down. What happens then? That you're going to get a big short squeeze. So I think we need to start preparing ourselves. Personally speaking, I'm watching this, that we just retrace or get on the path of getting back to just where we were yesterday morning, and that's really it. So we'll see where we go from there. Have a great rest of your morning. Thank you so much for joining me again, and I will see you guys tomorrow for the next morning note. Cheers all.